Welcome to Discover Fairbanks. Today we're joined by our trusted lending partner, Bethanie Yoakum with First Rate Financial, and we're going to be talking about some potential opportunities in the housing market that could be presenting themselves due to federal interest rate changes. So we've seen a lot of these cycles of rising and falling interest rates in the past, and one of the things we've heard a lot of times afterwards is kind of the pain and anguish that both home buyers and sellers go through because they ended up missing out because they weren't prepared for it. So today we're going to be talking about what's happening right now and how you can use this information to avoid some dreaded FOMO or fear of missing out. Bethanie, tell us a little bit about what's going on and how we can get prepared for it.
So really it's just staying in the know, and in terms of getting prepared, right, is speaking with the loan officer. Most people in the industry, most loan officers, they have a pretty good pulse on what's happening with interest rates, right? We have to watch them every single day. We keep track of like the economic calendars and just what's going on and what the Fed's fund rate is doing. And so I'm sure the news, I don't really watch the news. I don't know about you, Justin, but I don't really watch the news because I just, you too, yeah. I just kind of watch like, just what's pertinent to me. And I don't know what that says for myself. But anyway, if you do watch the news, I've heard that, they are talking about interest rates are starting to come down. And so that is true. It's just a really volatile market right now. The Feds have already come out and said that they do believe their next meeting on September 18th, that they do believe that they are going to at least cut 25% or 25 basis points, right? So that's set in stone. What we don't know and what they're talking about is potentially to have a 50 basis point rate cut. And that could be very market moving at that point. But it's just important to have a conversation with your lender to ask how are you seeing rates? How are you seeing them move around? And that's the best way to know what's going on for you specifically, right? Because every rates are going to change just a little bit differently. I can show you real quick what the market has been doing. Okay, so what we're looking at is the price of mortgage bonds. And so as you can see from June 10th until today on September 5th, you can see that this general trend is increasing. And so the price of mortgage bonds has an inverse relationship with interest rates. So as the price of mortgage bonds goes up, interest rates tend to go down. And you can see the volatility here, how it's gone up and down and up and down. It's kind of like a little stair-step fashion. It's not just a straight line. So that's what we're seeing. We're seeing the trend. The trend of interest rates is already dropping, right? So everybody's kind of sitting on there waiting for interest rates to drop so they can buy a home and have their payment be the lowest possible. And everybody wants that, and that's totally understandable. However, we're already seeing that trend now, right? And they might come down a little bit more if the Feds drop their Fed's fund rate by 50 basis points, but we already are seeing that trend. Also, most lenders, because it's known that the Feds are going to be dropping their Fed's fund rate by at least 25 basis points, that's already factored into most lenders' pricing. So if they only drop it by 25 basis points, I don't think there's going to be a huge shift in interest rates at that point.
That and the federal interest rate isn't necessarily the exact same as mortgage interest rates, and they're not calculated the same. So very well, as far as I understand it, it could very well be we're going to see 25 to 50 basis point drop somewhere in there here in the next couple weeks or something. But that doesn't necessarily translate to an instant drop in mortgage rates.
No, not necessarily. And the Fed's fund rate is the cost of the banks to borrow money, and then it just trickles down from there. Right now, there's a lot of things that affect mortgage rates. Inflation historically has been a huge one that has always affected mortgage rates. So we've seen inflation reports come in, and we're seeing inflation come down. What's really holding a lot of effect on interest rates this year is the jobs market, all of the jobs. So tomorrow is the BLS jobs report, and that's going to have a big impact. So that can be really market moving tomorrow. So we'll see what happens with that. We're hopeful that it'll, be good for interest rates, but we'll see.
Yeah, that'd be awesome. So in terms of how this is going to impact home buyers and how they can best kind of get prepared for this, what are some strategies that they can use in order to, when this happens in the next 6 to 12 months or so, that we start seeing substantial movement in mortgage interest rates, how can they be set up, for success for when that happens?
So I would say get in touch with them now. Just getting in touch with them now and getting pre-approved for a home loan doesn't lock you down to anything. But what it does is it puts you into position to look at homes if you find one that you like. And then it's up to you when you want to lock in. You don't have to lock in your interest rate right away. So if those interest rates drop during the transaction, either float and lock in if and when those interest rates come down. And even if you choose to lock in now, most lenders offer a float down. Us as a broker, we have the option of flipping to a different lender and potentially getting you a lower interest rate because we work with multiple lenders, or we could look at a float down as well. So either one of those is an option.
So it sounds like just getting a checkup, seeing where you're at in terms of your, credit score, debt to income, income, all of those numbers might be a great first step.
Yeah, exactly. It is. And you'd be surprised at how often you see on, when you get pre-approved, you get your credit checked. And so when we're going through a credit report, it's surprising how many things are on the credit report that you didn't even know were on there. And so sometimes, it can change your debt to income ratio and it can disqualify you potentially from the home you want to purchase. But getting in front of that and handling it before you find the home you want to purchase, before you miss out on it, is important. And I mean, it can be, life-changing for you and your family to be able to do that.
Sure. And it sounds like if we were to identify a lot of these issues, that might be on our credit report right now, that may set us up for some huge gains in the future.
Well, good news, you're going to get your pre-approval probably just get ticked up a little bit and you can just afford more, or payment's just going to go down.
Yeah. Even on the downside, let's say we don't see this ridiculous drop in interest rates. Mm-hmm. It sounds like even if we were to take these advanced steps, just to get ourselves prepared for it, we're going to win in the future anyway.
Yeah. What's the phrase? The early bird gets the worm. I mean, just be prepared as opposed to being reactive. It just puts you in a better position. It puts you in more control. Yeah,
and that's what we love is being able to go into, especially with the transactions here in Fairbanks, because of how volatile they are, just because of where we live. Going into a home purchase with much more information about your own finances, well in advance is just another way to win.
Yeah. Exactly. And when lenders have time to do a thorough review of your application, because there's a lot to look for, right? And so going through your application, looking at it like an underwriter is going to look at it, so that when you are under contract, you don't have to focus on the lending stuff. You don't have to focus on, trying to hurry and get everything over to them, then them potentially making a mistake and then trying to figure it out during the 45-day process of when you're under contract, when you're also negotiating repairs and home inspections and appraisals and repairs for the appraisals and well and septics like we have here in Fairbanks. There's just so much to negotiate and so much going on. And maybe you're selling your home in another state and trying to move here and trying to navigate all of that and getting your kid registered for school. Like, we could go on and on about all the things that you're going to have to juggle on the move to Alaska. And if you just get this little piece done up front, it makes things a lot easier. Plus, you might have access to the documents that we need. And if you do it afterwards and they're all held up in household goods, we don't have to. It makes it even more difficult to get pre-approved.
Absolutely. Let's talk a little bit about kind of the way things ended up the last time that we saw some substantial interest rate reductions. I mean, when we were seeing rates at like 2 to 3%, in the glory days, the market that buyers were entering into was quite a bit different than the market we're in right now.
Oh, definitely. So that was an interesting time. And I think it's just going to be an interesting time in history, because during that time, we had a pandemic. And so what happened during that time when people were forced to stay home, what the government did was they did something called quantitative easing. And so they artificially kept the interest rates low. So instead of interest rates naturally following inflation. So during that time, inflation, they were pumping money. Remember, they were just giving us checks for staying home because a lot of people were out of a job. So they were just pumping money into the economy, which is the definition of inflation. Inflation is too many dollars chasing too few goods, right? We also had a goods problem, right? Remember, that's why cars, trucks, remember the chip, they were all held up in some barges in China or whatever that happened. And so the prices of those went really high up. And so as inflation was ticking up, mortgage rates tend to follow. But during this time, what we saw, if I had a graph to show you, is you would see inflation going like this, but you would see interest rates kind of here. And so what happened when they quit doing the quantitative easing, which was the government buying billions of dollars of mortgage-backed securities every month to keep that low, what happened was when they quit doing that, that's when we saw interest rates go from like 3%, and then they just skyrocketed. And we saw them go very high, very quickly, which was, again, not normal. I didn't let interest rates take its natural course. Mm-hmm. And so now we're just kind of seeing that kind of fizzle out a little bit.
Yeah. And I remember during that exact same time when all that was happening, we had buyers that were pre-approved, ready to go and, ready to buy homes. And then we saw this interest rate rise. And all of a sudden, all those pre-approvals just evaporated.
They just didn't, they weren't approved anymore. When you go from a 3% to a 5% in, a few month period, it changes your buying power.
Mm-hmm, for sure. And you could have a really great goal of buying this great home in Alaska, and then decide, after all, it's just not going to be worth it because the cost of entry is so high.
And during that time when interest rates were low, we saw the price of houses go up really high. We saw competition was also really high because the cost of getting a home was, was minor. And so everybody was wanting to buy a house, and they were willing to pay $50,000, $100,000 over appraised value because they went high. And so I think as interest rates start to come down again, I think we're going to see another flood of buyers come to the market, which is only going to increase the purchase price. And you're going to see the payment level out. So if you were to buy a home now even though interest rates are coming down with maybe a little bit higher interest rate than you can get in like a year from now, if you buy now, what's locked in is the purchase price. What's not locked in is your interest rate because you can refinance. That's an option. So in a year, you can refinance into that lower rate, but you've already locked in the purchase price of that home. That part's not going to change. Yeah,
and we've seen just here recently, looking back at where we were a year ago in terms of our home values, they're still about $20,000, between $15,000 and $20,000 higher than they were just last year. And that change isn't stopping. And I would imagine that if more buyers are entering the market, that's just going to help increase, those differences between the prices this year and last year, and then a year from now to now.
But we're still having an inventory issue. There's still not enough homes on the market for buyers, and buyers need to buy, especially in Fairbanks. We have such a transient community. People are always moving in and out. And so it's difficult.
Yeah. And one of the consequences of all of that when so many buyers had entered the market was that we saw that a lot of buyers were negotiating these contracts and negotiating away a lot of the things that today's buyers are really focused on. Mm-hmm. So we had buyers that were negotiating away all repairs.
Mm-hmm. And all repairs.
Yeah, in order to get into contracts. And what that has done, they may have gotten the house, which is great, but we run into this problem, at least I know I do, and most people that I talk to also run into this problem, where we love being in Alaska and we love to be out in the outdoors and living life, and we don't really love to fix up our homes in our off time.
Yeah, exactly.
All summer long, we're out playing, and instead of taking care of, a lot of these, outstanding repair items. And what that's done is we've seen, several rounds of homes, a couple of rounds of homes now, because the initial buyer negotiated away all those repairs and then didn't do them. Mm-hmm. Now they're turning around to sell, and they're like, well, wait a second, now I've got to do all these repairs that are popping up. And it's kind of delaying a lot of the sales, or a lot of the ability to get into repairs and to get those repairs taken care of.
Interesting. Yeah.
Yeah. So that's another thing that we've got as our cosmetic home inspection repair plan. That's a great, program to get into for sellers that are thinking, maybe I might be getting on the market here in the next 6 to 12 months. It just makes sense to use that time to get prepared on the selling side, essentially, by getting an updated home inspection, getting some of those cosmetic repairs taken care of. And that's one of the things that we can do and to help out our sellers, is to get in contact with them kind of upfront, well before they're thinking about getting on the market, and identifying those cosmetic issues, those big repair issues, and coming up with a plan to get those done in the time that we have, as opposed to the 45 to 60 days that we have with a buyer when we're under contract. Mm-hmm. Because what we've seen is that you can either get repairs done good, cheap, or fast. You get to pick two of those three. And a lot of times, because we are, trying to get these repairs done in such a short amount of time, we're we have to get rid of the cheap factor and try to get it done good and fast. And that's what ends up costing a lot of our home sellers a lot of their bottom line.
A lot of their equity. Yeah.
Yeah. So by doing this and using 6 months or so to get done with it, we're able to save folks, quite a bit of money.
Yeah, that's awesome. Again, planning ahead.
That's right. Who'd have thunk? So, I mean, it sounds like with these changes that are coming up, getting prepared, whether you're on the home selling side or the home buying side, and using the time that you've got in order to get essentially a checkup, whether it's with Bethanie as your lender, or if you're turning around to sell, getting a checkup with our cosmetic home inspection repair plan, or CHIRP. It's a fun little acronym we came up with. Is a great way to set yourself apart from the competition that's going to be buying and selling in this time that we are probably going to see, because we saw it last time. So it sounds like there's a huge opportunity available, but in order to be best prepared for it, you have to start getting prepared for it.
I also want to comment, I didn't think of this earlier, but what I'm also seeing in this market, because the housing payment is such a big part of everyone's income right now, is I'm seeing that buyers are very skittish. And so even if there is what would have been minor things on a previous home inspection are now really big reasons that the buyer wants to back out of the deal. And then you lose that market time, on for other buyers. And so getting an inspection ahead of time and getting some stuff done gives the buyers more of a warm and fuzzy. Like, they want to stay with the home and they won't be so skittish and want to, back out of the transaction if they hear one bad thing about the house. I am seeing that a lot.
Yeah, I mean, that's another great way to set it apart, because, just like you said, buyers are so skittish right now. And the littlest tiny thing, it's like they're little deer, and the slightest sound or smell or anything sets them off, and they're turning and running away. Taking
on a payment that's with an interest rate that they haven't seen, in 15 years. And so they're scared, which is understandable. So they're already coming into it a little bit nervous and a little bit scared and wondering if they can take on this inflated payment. And so anything is also, is bigger than what it usually would have been previously, because they're already entering the transaction a little nervous.
And that's another benefit of the CHIRP program, is that you can identify and get all of those things out in the open, and a lot of times fixed in the time that you've got. And the ability for warm and fuzzies to form, for a buyer, it just happens that much faster, because everything's out in the open. They've got all of the information, and there are no unanswered questions. Yeah.
So back to being prepared, talk to a loan officer and see what is available to you as a buyer. And then as a seller, just also be prepared and get that home inspection ahead of time and start doing repairs. Absolutely. So thanks for watching, and thank you, Bethanie, for joining us today and helping us identify some of these strategies to avoid FOMO, and possibly losing out on saving a whole bunch of money. If you've got any questions at all, because I know we covered a lot of topics, drop them in the comment section below. Also, if you're interested in thinking about moving either to or from Fairbanks, check out our relocation guide and our home sellers guide down in the description. You'll also find a link to Bethanie Yoakum's webpage, so you can get started on your checkup and on the path to home loan financing. Or you can also give us a call, 907-885-0316. Don't forget to subscribe for more insights on life in Alaska.